Expecting a hold out of both the Fed as well as the Bank of Japan this week. But can the same thing be said when it comes to USD JPY's price with its volatile technical overview? Hello everyone, Monty here, market analyst at IG, with another technical cheat sheet video where we take a look at key technical indicators, formulate those overview, prep those strategies for when it holds as well as for when it fails. At times it certainly has, even if it has been quite volatile since the last time we did a technical cheat sheet video, which by the way, levels because of that volatility have widened on both daily as well as weekly time frame. That's something to consider for those of you they might not be receiving the IG's weekly or daily market report, as well as where traders stand prior. Still on opposite ends, COT speculators want to stay to the buy side, clients on our end to the sell side, shorting into price gains. We'll take a look at where there might have been some changes and, of course, fundamental considerations given, well, dual central bank announcements expected to have an impact, not to mention some significant data. Let's go ahead and take a look at it on the weekly time frame. There isn't as much to say here. I can see why some of you might be looking at this going, this might be a bull average technical overview. I'll get to that when we get to the technical overview classification. Price above all its main short as well as long-term weekly moving averages. Price not too far off the upper end of the band after breaching it prior. You got the positive DI still above the negative DI, but not enough to tilt that technical box, the DMI box, from neutral to green. And you got an ADX that needs a bit of a push to get, by some measures, into trending territory. What about in the daily time frame? Bit choppier here. Yes, price is above all its main short and long-term moving averages, but it kind of ends there when it comes to main technical boxes, the rest of which are neutral. Price not too far off the upper end of the band. It's going to take a little bit of a push to get the positive DI, to get a positive DMI across, and an ADX nowhere near trending territory. So when it comes to USD JPY at the 150 line. I talked about this back when we did the video earlier this year, and what happened whenever it reached 150, because at the time price was around, it had breached 150, it was around 151, and we were taking a look at what kind of moves to expect at the time. And you look at what happened in the past in October 2022, 23, and every time whenever it tried to get past 150, and that was kind of seen as the red line. Now, that's February 13, 24. That's what I talked about last time around. Let's go ahead and take a look at what happened afterwards. February 24, you saw that you had the initial breach. Afterwards, it managed to hold. It came back down, and then afterwards in March, you had that move higher, and bam, then came the big volatile move. And at the time, by the way, the overview was not bullish or bearish. We went with a volatile overview. We were going for breakouts because of what we saw in the past, but also what to expect in terms of the future. We knew that there was some volatility expected, or eventual volatility, when it came to the 150 at the time red line. We saw a move all the way up to 160 before afterwards coming back off that level. So based on historical technical considerations, even if there have been calmer weeks at time, even if 150 is no longer seen as the red line, as well as underlying yield spreads, we're still going with the volatile overview here. I can see how someone might look at this as bull average. I'll get to that in just a moment in terms of what strategies to expect. But the narrative under a volatile overview is going to remain breakout versus reversal. And if you take a look at the gap between the RSP and the first, the difference is widening. It was 160, now at 172, and so too when it comes to the gap between the first as well as the SL or stop loss at your discretion when you are formulating this item. So what do I want in the daily time frame? It's also a volatile overview. I understand that there have been sessions where that may not have been the case. It did require quite a bit of patience, even on some weeks and some days, especially if there isn't a fundamental kick or something that isn't happening when it comes to the underlying markets to really kick things or give it some momentum and give conformance breakout to the edge. But if we are looking at if the consideration is that we're looking at a bull average on the weekly time frame, that of course means that conformance are going to be buys, but you're going for a buy after a significant reversal off the first support for the weekly. So that's one thing to keep in mind. You're not necessarily just buying as is. You're noting that rough channel, if you will, when it comes to the weekly time frame. On the daily time frame, though, it's been a difficult conclusion to come to. I mean, you got a couple green technical boxes. That's not really something to say we're in a bull average, and you kind of have to note that if you have such a big wide channel on the weekly, it doesn't take much to tilt things on the daily, depending on where you are within that channel. And that's why the narrative can really shift quite a bit. And interesting to know that when it comes to RSP, it's the first also been a widening. I want to say even a more significant widening if you're looking at it in percentage terms for the daily, from 63 back when we did this early on April 1st to 81, and of course widening the stop loss as well. What about where traders stand? IG clients, we got the majority sell. This is week on week in terms of the circles. They were 75%, not far off extreme sell, coming down to 73%. COT speculators, they reached 87% extreme buy, pulling back due to an increase in longs as well as a simultaneous drop in yen shorts, taking the yen extreme sell bias, i.e. USD JPY extreme buy bias, lower from 87% to 81%. But let's go and plot on the chart because a lot of times it's a lot easier. Green dotted for COT speculators as percent long, looking at the left axis. That red dotted line, that's the 50-50. Whenever you see a dotted line above, it means the majority buy. Dotted line below, like we're seeing here with IG clients in blue, you're seeing that throughout this period of time in majority sell territory. I did talk about before about what happened in terms of when they tried to get out from, but generally speaking, it's been a story for IG clients shorting into price gains beyond the 150 level, which here actually almost coincides with the 50-50 red line. So, price went up, you saw them shorting significantly, and then you had this big squeeze over here and back down, and then once price went up again, you're seeing them shorting again, but much more cautious and not as extreme as it was before. This wasn't a great move, of course, when it comes to those that were shorting into price gains. That was one of the reasons why we stuck with the volatile overview. You want to retain that flexibility. I understand that in the past it did manage to hold, but you want to wait until you have those breaches before you actually go with the move, and of course putting a stop loss so that you can go for another round in the next week or the week after. What about when it comes to COT speculators, green dotted line? Interesting to note that when it got to the 150 line, they actually started to raise their long bias. So going with it, momentum guys really went with it. You had this move over here. You didn't see that much of they dropped a little bit. You saw them picking up again. More recently, you have seen them pull back from 87 to 81%. But generally speaking, where you'd expect them to be in terms of extreme buy bias. Don't forget, they bought a large chunk of them bought at much, much lower price levels, so they do have a significant margin to work with. This is on the daily time frame, though. There isn't as much to note here, but you can kind of see exactly where especially for IG clients, where exactly they decided to get in as well as get out. So what about when it comes to fundamental considerations? Remember, we're looking for anything that might entice those yield spread fluctuations. I know that there are some other factors to take into account, but a lot of times that has been one of the motivating factors, or at least one of the items that have been noted by market participants, even if there's this big margin between where the Paris price is right now and where underlying yield spreads are. A lot to work with, and it shouldn't surprise anyone if we do get these significant volatile moves as a result. You do have some treasury auctions Monday, the 3-year, depending on when you're watching this, already passed potentially, but then you got the 10-year on Tuesday and the 30-year on Thursday. But of course, sandwich in between, you got the big ones, US CPI on Wednesday, and as well as an FOMC hold, where the dot plot is supposed to be far less optimistic in terms of rate cuts compared to March. So March, instead of 3, maybe looking at 2, maybe even down to just 1. But we are expecting changes when it comes to the dot plot. But a hold, given market pricing suggests that we may not get the first rate cut until November. September has always been close to a coin toss, market pricing courtesy of CME's Fed Watch. What about when it comes to the yen? We already got Monday morning, you already had first quarter GDP figures negative. You got producer prices on Wednesday, but then comes the Bank of Japan's hold on Friday. Bond buying is going to be in focus for the time being, given that for now, at least, we're not expecting a hike. You heard that right. Contrary to the other central banks that are looking to cut, you're not expecting a hike, market pricing courtesy of LSEG, until around July.